Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Plenty of small and medium-sized businesses are doing it tough right now. Interest rates have shot up in the last year to combat soaring inflation. The minimum wage has just increased as well, and we still have an extremely tight labour market, meaning there's more competition to fill roles. While supply chains have smoothed out a lot since the COVID disruption, it's still not perfect, and businesses are being hit by higher costs across the board, led by huge hikes to power bills. In the words of my guest today, it's a perfect financial storm. And in the middle of it are SMEs trying to pay suppliers and get paid themselves, putting cash flow and working capital challenges right at the forefront of every business owner's mind. Wayne Morris is the Chief Executive Officer of business finance provider Fifo Capital and a supporter of this podcast. Wayne, welcome to Fear and Greed.
Great, thanks for having me.
A perfect financial storm. So have you ever seen so many challenges hit small business or SMEs all at once?
Look, I have. Back in the UK, when the global crash, I was there. For my sins, I'm ex-Grant Thornton, and we were commissioned at the time to help SMEs get back on their feet and get back on track. So slightly different problems, but came to the perfect storm. Problems with cash flow, problems with accessing finance, interest rates, etc. So yeah, we're seeing it, a similar thing happening here.
Okay, so how did that play, before we get into the importance of cash flow and things like that, how did that play out, and do you think it'll be similarly here?
Well, the key difference, I think, in the UK was there was a massive investment from the government in looking at ways to help SMEs solve their problems. And that's really what was the creation of things like alternative finance solutions when banks weren't lending, looking at the British Business Bank, which brought affordable funding back on the table for SMEs, which wasn't available from the bank. So there was a lot of things done driven by the government to actually do that. Over here, obviously, we have a problem with many different factors affecting businesses. Obviously, Australia, different to the UK, immigration is a big problem. Finding workforce, they just seem to have disappeared after COVID. Wherever they went, I've no idea because we were all in lockdown. But massive problem there. And obviously, yeah, you're right. Interest rates, lack of access to finance, supply chains. We've seen so many SMEs struggle because they just can't get the goods from overseas anymore because they just can't get them imported. All the ships aren't there anymore. So it's a different problem, but it's got to be dealt with from many different areas, government, as well as support from banks, institutions. And I'm just not seeing that actually happening. I don't think the budget recently helped SMEs at all. It was very light on any support.
Is this a cash flow challenge more than anything else?
Look, cash flow is king. They always, the old saying, turnover is vanity. Cash flow is king within a business. If you've got cash flowing through your business, you technically don't need to be profitable. You could break even and still trade. When you're not getting cash flow through because you can't trade, because you can't buy goods, it's going to cause your business to fall over. And, SMEs are, people say the engine room. I know I coined that phrase immediately. I landed in Australia. They are the engine room of the country. If they stall, we stall as a country, net largest provider of employment. So if they're not having access to solutions or the ability to keep cash flow flowing through their business, then the lifeline of their business is at risk.
Okay, so this is where Fifo Capital comes into it. Businesses who find themselves in a tight spot with cash flow, they've got a bunch of options, and I would like to go through some of them. Let's start with working capital loans.
Okay, so working capital loans, in my view, is just simply a Band-Aid over a bigger problem. Mm-hmm. So any form of business loan, which is good, and you've got to look at finance in the space of what are you trying to use it for. If you're taking a business loan to solve cash flow problems, in my opinion, you're just delaying the problem. And that's why it's a Band-Aid. And what you'll typically find, or we find as a financier, or every financier will tell you, you look at a balance sheet of a business and all that happens is you just see loans on that balance sheet. They've taken the loans, a short-term fix, but it's now sat on their balance sheet for another 12 months while they pay it off. That's not good for business. What is good for business is smart solutions, which historically have been held back for bigger businesses, but smarter solutions which are more transactional in their approach that help smaller businesses bridge the gap of whether it's being paid slowly, so cash flow, or having to pay suppliers, working capital, because that kind of finance is directly linked into the way a business trades and supports that trading. Whereas loans are just a slug of cash that's going to fix something today, but present a problem of its own nature later on down the line.
Stay with me, Wayne. We'll be back in a minute. I'm speaking to Wayne Morris, CEO of business finance provider Fifo Capital. Okay, so what are some of these smarter solutions? What are some of the examples?
Okay, so you've got things like trade finance, supply chain finance. Now, supply chain finance, some of your listeners will listen to that and know that it's been through a bit of an interesting phase within Australia. I did speak at government about this and why it is actually a very good product for smaller businesses. These products allow businesses that are on poor terms with their suppliers. Let's say they're on 30-day terms or COD terms, but they need longer terms to still have the supplier paid on the normal terms, so 30 days, but then pay the financier back, say, in 120 days. And what that allows them to do is take those goods from a supplier, turn them into whatever product they're making for their customer, sell them to the customer, and effectively then get paid by the customer, know that they're not under pressure to have paid the supplier because that's already been taken care of by the financier. And when the customer pays, then our client just simply pays us back. So it's a very transactional type of finance, which rotates through as they need it, and they dip in and out of it as they need it. Another version is a cash flow finance solution. Now, cash flow finance is where business can take their, say, slower paying customers who might be larger customers. I'm happy to talk about why I don't think the way we address larger customers paying slowly is the right way in Australia, but nevertheless. But, you've got larger customers who pay slower because they've got their own constraints. You can take finance products that a business can say, well, actually, I'll use my financier to pay that invoice to me early. And then when my customer pays, I'll just pay the financier back. Now, what that does is that removes any cash flow constraints on the business immediately. They've got no late paying customers anymore. The financier takes on a lot of the burden of that, and the SME can actually get on with actually running their business.
Okay, and then so where's trade finance fit into this?
So trade finance fits into it, where if I've got a lot of suppliers that I need to buy things from, and they're on, let's say, COD terms, I can use trade finance to pay those suppliers for the goods. I can then make those goods and I can pay the financier back once I've been paid by my customer. That's more of a working capital solution.
Okay, so but the point with the supply chain finance and they're not loans, they're not long-term loans which just sit on your balance sheet anyway. They're much more transactional, which you can dip in and out of as needed.
Yeah, absolutely. In every business that exists, no matter what industry they're in, there's a thing called the cash conversion cycle. And that's the amount of time you have to pay your suppliers less the time that goods are in stock and the time that your customers take to pay. So in other words, that's the period of time that you're going to turn your money. So if your suppliers give you 30 days, but you've then got 30 days of making something and 30 days to be paid, you can see you're going to need some cash to bridge that. These products help SMEs shorten that cycle. So to, in effect, turn themselves into a Dell and Amazon, because those guys are paid before they have to pay their suppliers. So what we could do with our products is actually help a business bridge the gaps that are the constraints on their cash flow or working capital. So we bridge it, we're kind of in the middle, and help them shorten that cash conversion cycle so they can either get paid earlier or delay their payments to their suppliers as needed, what's best for their business, but without disrupting the relationship with the supplier or the customer. That's the true win-win of this. And when you bring that into the SME space in Australia, what you actually do is you free up for all businesses to trade on the terms they want without actually disrupting the terms their customers and suppliers want as well. It's a true win-win situation for all businesses.
Okay, so what types of businesses are typically taking advantage of Fifo Capital and providers like yourselves?
So we've got construction, manufacturing, importers, particularly a lot of importers where it's taking longer times to get things in, logistic companies, pretty much any company with a supply chain or a customer base where they are feeling the pinch of longer credit terms or worse terms with their suppliers.
Okay, I'll ask you about Fifo Pay before we go too. It's your latest offering. It uses AI to act as a digital CFO, or at least that's how it was described to me. How's it work? Is it all about automating cash flow management?
No, it's way more than that. One of the key things I think SMEs also shouldn't have to suffer is invoice fraud that we're seeing more and more of. So what Fifo Pay does, and we give this to businesses, there's no fee for this. We don't see why we should charge for this. We give them the ability to use Fifo Pay, firstly, to analyze their invoices on the fly and identify for them where there are potentially fraudulent or shall we say, misrepresented invoices from suppliers.
Yep.
So they know they don't get caught out. Secondly, what it does, it will tell them which suppliers will actually offer them a better deal if they could pay them early. And it will also rate their customers and tell them which of their customers are actually worse or maybe even getting worse as a paying company. They can then inject finance from Fifo or any other lender if they want to. It's not about us, but they can inject finance where they need within that whole platform. So they could say, okay, I've got supplier discounts I could capitalize on if I had the money. Well, I'll activate a Fifo overdraft because I don't quite have the funds myself, but I can get a 2 or 3% discount because I paid my supplier actually COD, and Fifo is going to cost me a fraction of a percent. Happy days. I've actually got a massive win-win. And for my customers who are slower paying, going to affect my cash flow, I can actually bring in funds to actually get my invoices paid early. And ultimately, the reason we call it a CFO, it's your digital CFO, is it will tell you how your cash flow is going, or your cash is going to look like over the next 3, 6, 9 months, and then tell you which are the best invoices you might want to finance or
Right.
to help that, because those are the customers or suppliers that are going to most impact the future of your business.
Wayne, thank you for talking to Fear and Greed.
You're welcome.
That was Wayne Morris, CEO of business finance provider Fifo Capital, a supporter of this podcast. This is the Fear and Greed business interview. Remember, discussion of financial products today was general in nature, and you should seek professional advice to decide what's right for you. Join us every morning for the full episode of Fear and Greed, Australia's best business podcast. I'm Sean Aylmer. Enjoy your day.